Good evening, members. This side Rahul Magan here as a Group Chief Executive Officer, Rishi Consulting, and also a venture capitalist. Now, first of all, I'm extremely pleased to share that on a short app known as Moj, we crossed near about 1850 videos. You heard me right, 1850 videos. Short videos of 1 minute each. On a short app called Josh, we crossed near about same 1850 videos. On a short app called Chingari, we crossed, in fact, we are very close to 2000 videos. Probably by, I would say by another 10 days to 15 days, we would have near about 2100 videos on our Chingari app. We are planning to shortlist near about 3000 videos in 2022, and probably by December 2022 we would have near about 5000 videos in our short apps. Now, when we speak about short apps, we cover market like financial markets, the news, the everything. You are welcome to join these apps. These apps are absolutely free. In case you wish to have any information about the apps, you can refer our Facebook profile. The links and everything are shared. Now, coming to the point. As we speak, TCG Consulting is a multinational headquartered group. We are based out India, Singapore, and Hong Kong. Apart from that, we are 100% profitable company. Unlike the big players like Ola, Uber, Swiggy, Zomato, Lenskart, Paytm, Delivery, we are not unicorn. But yes, we are 100% profitable unlike them. Not a single dollar in our organization is dependent on any private equity, any private equity, any venture capitalist fund. We are a hedge fund. We take position in FICC, fixed income, currency, and commodities. Apart from that, we take positions in crypto also. When I speak about crypto or any other asset class, not a single dollar of position is backed up by any third party. Yes, we do sharing our videos, our lectures, the market updates on the public YouTube channel. Apart from that, we have our news desk, which is paid, where we sharing the international news, the national news, our own commentary. We have our financial consulting business. We have our private placement programs. We have our fixed income desk. We have our family office desk, our Shital Academy, and more importantly, our OTT platform. By OTT, it means over the top. As we speak, world have many OTT platforms like Amazon Prime, Netflix. They are very big, and as compared to them, we are very small. So our OTT platform is nothing but the private videos covering the knowledge about financial instruments, fixed income, currencies, forward, futures, everything in the public. in the private mode. Basically on YouTube it is public, but there are many videos which we share in private. So it is just like Amazon Prime. Like if you wanted to see any movie, you can go to cinema hall and anywhere. But if you wanted to see in a private way, you have Amazon Prime. More products are on the cards, and very soon we will let you know. In case you wish to have any information, you can WhatsApp on my personal number, which is +91 9899 242 978. Alternatively, you can WhatsApp at our back office, which is +91 9818 485 155. In this part, we would be covering about CFA. Have a great time ahead. Evening. This is part first of that video. In this, we would be covering the CFA course curriculum one by one, respectfully. Now, first of all, I would like to appraise everybody that I procure the CFA study material not from internet but from Amazon. So if you go to Amazon, you will get CFA 2022 level 1 study material. This is by Amazon. So this study material is not from the internet. It is not from any third website. There are many websites we have, those who are selling these study materials. So we have procured this study material from Amazon directly by paying on their website. As you can see that this study material is clearly mentioned CFA Institute, and this is by Amazon. We have the bill of Amazon in which we can prove that this study material is from Amazon. In fact, we are now buying another study material which is of FRM, and that is again from Amazon. It is not from any third website or any just took the download of any website and just print it out and share. So if there is any issue with the whatever we are saying in our videos on CFA, this is based on this study material which we got from Amazon. Now in this we are covering 2022 level 1 volume 5, and the book, or basically the booklet name, is Fixed Income, Derivatives, Alternative Investment and Portfolio Management. You can refer this. This is what we got from Amazon. I hope that CFA Institute must be having some sort of tie-up with Amazon, whereby they are selling their material directly to the Amazon, and Amazon is selling to their clients. Anyways, that is between CFA and Amazon. If you go to this study material, and as you know that I have pinpointed a pointer here, you have to go to page number 6. You can see that. Page number 6. This is a study material, right? I have made pointer also. In this, first of all, before I explain, let me first explain what CFA Institute is saying. Successful analysts must develop a solid understanding of the risk and return characteristics of fixed income investments. Beyond the vast global market for public and private fixed rate bonds, many financial assets and liabilities with known future flows you will encounter throughout your career are evaluated using similar principles. That is completely incorrect, because we are in 2022, and 2022 fixed income is completely different than we have in 2021. 2021 is different than 2020. So let's take a simplistic example. When the fixed income or the ETFs, they were started many years ago, the kind of instruments we were having at that point of time is more or less nowhere exist. Example, LIBOR. I know that there are many MBA institutions we have in India and outside India, those who are selling LIBOR. But is LIBOR really worth studying now? We have SOFR. Of course, we have more videos coming on SOFR. Few videos are live on YouTube. SOFR having its own challenges, which time would tell, and we'll make a video in that regards. But does that mean that the way we were issuing instruments on LIBOR, we are going to be issuing the same instrument in a similar fashion on SOFR? Cora, Taron, Sora, ESTR and all RFRs? No. Henceforth, the word called similar principles is really an interpretation issue to me, which I am raising. Let's move forward. The analysis starts with yield to maturity or internal rate of return on the future cash flows introduced in the fixed income valuation reading. Now hold on. We have four kind of yields in the world. Number one, yield to maturity. I agree. CFA Institute mentioned this. Yield to call, yield to put, yield to worst. You please open Google and type embedded derivatives. Huge list is on the way. Huge list is on the way. You will feel like, oh my God, what the hell is this? Which one to open, which one to not? Today, the big boys like Goldman, JP, Citi, Morgan Stanley, UBS, they are champions in embedded derivatives. Billions of dollars worth of embedded derivatives are issued in the world, and as we speak, it is difficult to assess the exact amount. I fail to understand that in this CFA Institute, the curriculum which we got from Amazon, and of course there is a stamp of CFA Institute is here, right? They failed to mention the embedded derivatives. So it is like, how would I say that I am going to be buying a car and people are telling me as we speak, we have only two kind of cars, petrol and diesel. Oh my God, I have electric vehicles. I have hybrid vehicles which are run from hydrogen. So how can you say that in 2022, we only have two kind of vehicles, which is petrol and diesel? We have electric vehicles. And by the way, electric vehicles have many types, different types, like Ford have different electric vehicles, Tesla selling different kind of electric vehicles, multiple companies are selling different kind of electric vehicles. So you have electric vehicle categorization as well. It is like you go and buy a petrol vehicle, you have this categorization, and then you decide, oh my God, this is what I want and whether this is in my pocket or not. Now the moral of the story here, which is very simplistic, and the rest we would be covering in the part 3 of this video, that the material which we are studying, this material needs to be updated. Because it is simplistic that embedded derivatives this is not something which is, I would say, new. This is something which is absolutely old in nature. Billions of dollars worth of embedded derivatives in the world is being issued. Rather, if you go to Amazon and you type embedded derivative, there are many books, and I have many, and of course I'm planning few videos. There are many books being made on embedded derivatives. But if I look at here, this analysis start with the yield to maturity and internal rate of return on the future cash flow introduced in the fixed income valuation reading. Absolute stunning. And by the way, why internal rate of return? Why not modified internal rate of return, XIRR? Now, whether this is a mutual fund, whether this is an ETF, or whether this is any other hedge fund, internal rate of return is obsolete. The world is on XIRR, not IRR. Of course, IRR is there only in the books. Now you need to decide who is right. If I am incorrect or CFA Institute is incorrect. And this is the study material which I have. By the way, I got 6 books. So it is not feasible for me to cover all 6 books in one video. But yes, eventually I would be covering one by one book. Probably it take 1.5 years to me to cover everything. So don't expect me to cover everything in just one night. But this is tragic for me that we have XIRR, we have yield to call, we have yield to put, you have yield to worst. And all missed here. This is the reason I called CFA as Certified Financial Analyst. And many people feel offended that why you call CFA as Certified Financial Analyst. Because we need to understand. And by the way, I would be covering a little bit in detail in the part 3. Yield to call, yield to put, and yield to worst have different permutation combination. Thank you very much, gentlemen. Ladies and gentlemen, we'll see in the part 3 of the video. Evening. This is part 3 of the video, and in this I would be highlighting a bit about yield to call and yield to put. So actually there are 2 kind of issuer we have in the world. Number 1 is people are huge cash, AAA rating, Apple, Google, Microsoft, Accenture, Amazon, Facebook, complete cash rich companies, and AAA credit rating, no doubt. Other kind, you have companies, those who are not AAA, but they are probably A, triple C, unfortunately D also. After Corona, the credit rating of majority of the companies worldwide impacted. It's not about India, worldwide. I have the screenshot of the Bloomberg with me in which it is confirmed that around majority of a part of MSME of United States are in little bit trouble. And I have the screenshot with me. So if this is the scene of United States, then what about Australia, India, maybe Thailand, maybe Dubai, and different parts of the globe? So we can assume that. Now what is yield to call? The people, those who are very big, huge cash, just like Apple, if they issue any bond, or probably if they sell any, I'm wrong, if they sell any fixed income instrument, that would be the right word. If they sell any fixed income instrument, then they take yield to call. Now, which means if the interest, suppose, let's assume that Apple issued at 1%. Nowadays, there is a different phenomena which is happening, and unfortunately, I have not seen in the CFA. Maybe later on I will see. So I have not putting any comment as of now. 10-15 years ago, what used to happen is these fixed income, actually from where the word fixed income came into the picture. That's very important to learn. Fixed income came into the picture because in fact, a decade or two decades earlier, majority of the instrument issued were having fixed income, 2%, 3%, 4%, 6%, 10%, whatever. But now the scene is changing. The scene is the companies, the hedge fund and the other players, they are issuing a float-based structures. Now, float-based structures is a hell lot of word, very heavy word, let it be honest, and don't expect it to be explained in 5 minutes. Don't expect. It is called float-based structures. The big boys like Goldman, JP, Morgan Stanley, Citi, UBS, they are champions in these structures. And internet is hardly talking about these structures because no one willing to make a video on that. These are very technical videos, and the ability of the people to understand these videos is very small. They don't understand these things. They are high-end investment banking structures, float-based structures, which are used by the big banks. So of course, if there is low demand, there is low supply. Common sense. Now the fixed rate, or called fixed income, is changed from floating, changed to floating, which generated a big market called float-based structures. Unfortunately, the CFA Institute and many other MBA courses we have worldwide, they don't teach that because it's very complicated. You need good authors to write about that. You need to make people understand. Nothing is easy. And one complicated thing which these float-based structures are nowadays actually is when the big boys added the embedded component in that, which includes call and put. There are other also step up, step down, ranged callers, reverse callers, inverse callers. For many people, reverse and inverse callers are same, but actually they are not same. Henceforth, we need to understand that if we are doing any course or degree or any kind of certification, especially when it comes to CFA, we need to learn what is the expectation of the industry. And by the way, industry means banks, common sense, because CFA people hardly require in the manufacturing sector. You don't need CFA in the manufacturing sector. CFA people are always in demand from investment banks, from banks, financial institutions, ETF, hedge funds, and others. Now, they are completely in their own world, but these curriculums are their own world. That's a problem. So one thing which we need to learn is that the fixed income is not what it was. It is not what it was. It is completely different now. And probably by June 2022, when LIBOR would be phased out thoroughly, because the first phase is done, then it would definitely be more different, more different. So we need to learn one thing, that the kind of certification, the degree, the courses, maybe whatever we are entering into, we need to make sure we are as per the industry practice. That's very important thing. And industry practice is the float based structures. It's about yield to call. It's about yield to put. It about ranged. It about callers. It about inverse callers. It about reverse callers. It about cap. It about caplets. It about put. It about OIS and hell lot of things. This is why I always say that the international certification requires the upgradation in the courses on a quarterly basis. Forget yearly basis, quarterly basis. If CFA Institute think that they are willing to challenge, then my number is 9899242978. And I again repeat that this material is taken, as you can see that this is already a printed material. This material is taken from Amazon, and probably in a later stages we would take more material from Amazon. But I tell you one thing guys, the market is changing. Are we changing? I don't. This is Rahul Bhagan from Rishi Consulting Group. Have a great time ahead. Thank you. This is the video which is dedicated to the Treasury Consulting Group. And to be very honest, we are keeping this video now onwards at the end of every YouTube video. And all the courses by Shital Academy and Treasury Consulting Group. There are many questions people generally raised about Treasury Consulting, the products, the services, and we reply these questions on WhatsApp, LinkedIn, Twitter, YouTube, and variety of forums. But the quantity of questions, the queries are continuously increasing. Henceforth, we decided to make a video. Of course, this is not the only video which we are making. Rather, over the period of the time, we would continue to upgrade this video, to be precise. First of all, Treasury Consulting Group is a multinational headquartered group. We are based out India, Singapore, and Hong Kong. As we speak, company is around 5 years plus old, and more importantly, we are 100% cash rich company. Unlike the so-called unicorns, without quoting the name, and even if I quote the name, it's a fact that they never touch the profit. The company is in profits from inception. So since inception, the company is in profit. So we are a 100% cash rich group, 0% venture capitalist, and 0% debt. More importantly, our legal entities invest our free cash with mutual funds and international banks across the globe. We are a client to almost top 10 mutual funds in India, and that is the reason we do have holistic information about the mutual fund industry in India. That's a separate thing, that majority of the information never comes in public domain. Even if a fraction of the information comes in public domain, this fraction of information come for one day, and then you know how it happens. So as we speak, we do have 3 legal entities: India, Singapore, and Hong Kong. More importantly, we are a cash rich group, and we are having 0%, which means not a single cent invested by any venture capitalist or private equity firm. The company has not taken debt from any bank, financial institution, or hedge fund. So we are a zero debt company. That is something which we need to understand very holistically. The following are the products and services we do have about Treasury Consulting. The more detail is coming at the as the video progress. We have our own proprietary hedge fund. Many people in the world do not understand the meaning of proprietary. The proprietary means no party outside Treasury Consulting can invest in our hedge fund, which means that we trade with our own money. We are not accepting anybody's money. Even if you give us any amount of money, any proposal on the table, it is completely rejectable. So proprietary is a word which is often used in United States and Europe, but unfortunately this is least used in India. The proprietary means people trade their own money. They do not trade somebody's money. Even if tomorrow, after listening this video, you come to us and say that I give you $1 million to trade my money, I will say thank you very much. We are literally not interested. We hold our own proprietary fund, and that fund would continue to be proprietary, which means that the outside participation would continue to be zero forever. This fund includes the equities desk, the commodities desk. We have our virtual comics platform. More importantly, we have our OTT Academy. OTT stands at over the top, just like we are having Amazon Prime, we are having Netflix, Disney. There are so many, OTT platform we have worldwide. Our OTT platforms is not as big because they started 6 months ago, but thankfully we are having handful of customers and they are growing. In our OTT platform, we are creating video and uploading at the back end of our platform. People with authorized login ID and password can see these videos. Apart from that, no one else is authorized to see these videos. As the video progresses, you will get to know that as we are having around 13 plus, which is 13 plus different series as far as the OTT platform is concerned. As we speak, August 2021, it is 13 plus and we are continuously adding more series. Our idea is very clear. We will reach to 35 or probably 40 series in another 1.5 years of time. We are having our learning arm, which is Shital Academy. The details of the Shital Academy is given at the end of the video. We have our own family office desk. Rather, very soon, our hedge fund would be a part of our family office. We have our own pension fund desk in terms of consulting. And there are 62 plus different platforms which are listed on our fixed income platform, which is www.fixedincome.global. So as we speak, we have our proprietary hedge fund, we have our equities desk, we have our commodities desk, we have our virtual comics platform, our OTT Academy, our penny stock desk, Shital Academy, family office, pension fund, and variety of such platforms. TRFX Academy, which is our OTT platform, over the top platform. This platform is having 13 plus series. Now, few I mentioned, basic series, moderate series, advanced series, valuation series, treasury series, wealth management platform. Wealth management platform is actually integrated with TRFX Academy and would continue to be integrated because of course we would be investing heavily in the wealth management platform. When we speak about wealth management platform, we speak about the learnings. We are not talking about the trading. There is a difference. It's a training platform. Remember this. We have 13 plus different series, like few are basic series, moderate series, valuation series, advanced series, treasury series, research and analysis series, and we have variety of such series. So please do remember that. As we speak, we have around 180 plus videos live. Every week we shot 10 videos. So every month we are adding around 40 to 50 videos, and we keep adding more and more videos as the time would come. The target is very clear that we would be having more than 2000 plus videos probably in another 2 years of time, which means a dedicated private platform for learnings. So what is the wealth management platform? A wealth management platform is designed to cover all asset classes of the globe. The asset classes includes the fixed income, currencies, commodities, credit derivatives, structured derivatives, and many more. So I repeat, a wealth management platform is designed to cover all asset classes of the globe. Wealth management platform is also designed to cover continent-wise topic. Continents are United States, Europe, AXI, Asia excluding India. We have excluded India because the financial markets in India are very shallow. Very shallow. Like if you speak MTN, medium term notes, if you speak about any exotic derivatives, nowhere people are taking this. In fact, you know that I worked as a corporate registrar. Even today 99% of the treasury function in India are working as a cost center. Hardly 1% are working as a profit center. Hardly 1%, to be honest. So the continent wise include United States, Asia excluding India, Asia excluding Japan, India and Japan, global financial centers like Singapore, Dubai, Hong Kong, Luxembourg, Switzerland, and respective, and of course Latin America. We are creating a wealth management platform which would be covering everything. Example, CDS, credit derivatives. India is not a market of credit derivatives. Reserve Bank of India on paper allowing credit derivatives, but neither we have buyer nor we have sellers of credit derivative. So on paper you have credit derivative, but practically you don't have the credit derivative in place. Henceforth, we really need to understand that if we wanted to talk about credit derivative, the only markets are US, Europe or Singapore. India was not a market, is not a market, and would continue to be, because we are doing nothing substantial to create a credit derivative market in India. That's the reason even after a lot of frauds which are happening, banks are just writing off the money from their books. Simply writing off the money from their books. Had it been the credit derivative, banks would be able to get their money back. But once again, if you talk about this issue, people don't understand because they are not interested to have this. Anyways, a wealth management platform designed to cover all asset classes of the globe. And very soon, this wealth management platform would link with our fixed income platform, which is www.fixedincome.global. And of course, we would be adding crypto as well. That is most important. We are planning around 1000 plus wealth management videos by December 2022, which would be covering continents like United States, Europe, Japanese market, Asian markets, global financial centers, Latin America, the tax havens like Bermuda, BVI, Caribbean and respective, and structured finance, my favorite. 1000 plus videos would be covering almost everything as far as the wealth management is concerned. We would be covering a very simplistic and the plain vanilla topic. At the same time, we would be covering the exotic topic also. So basically our wealth management platform is for the people, those who are having zero knowledge, and it is also for the people, those who are having advanced knowledge. Please understand that. It is not designed for the people, those who only have basic knowledge, or the people who wanted to have exotic knowledge. People with the basic, moderate or advanced, they all can participate. This is our TRFX Academy, a screenshot taken from our fixed income platform. This TRFX Academy is our OTT platform, which is over the top platform, and in this TRFX Academy we are of course interlinking the wealth management platform also. I promise you, probably in another 1 to 2 years of time, we would be adding a lot of content in our wealth management platform and of course our TRFX Academy. Only people with the login ID and the password can enter into this platform, and of course on a weekly basis we are trying to have at least around 10 plus videos, so that we would be able to reach to the target as far as the December 2022 is concerned. And we are committed to it, sir, to be honest. Rishi Consulting Group having own learnings platform, which is known as Shital Academy. As we speak, Shital Academy is covering around 13 plus schools. Few are mentioned here. The World of Options, Option Worlds, School of Nifty and Bank Nifty, School of Investment Banking, School of Venture Capitalist and Private Equity, School of Commodities, School of Accounting, School of Foreign Exchange, School of Treasury and Risk Management, School of Forensics, and more schools are coming. Before I change the slide, the purpose of Shital Academy is to create a learning platform which link with Thomson Reuters and Bloomberg. We know that we have many learning academies worldwide, and I challenge all learning academy, how many of them are actually linked with Reuters and Bloomberg. I often share Reuters and Bloomberg screenshots on YouTube, on LinkedIn, on WhatsApp, on Facebook, on Twitter. Hardly I see, in fact, limited people in the world are sharing the Reuters and the Bloomberg platform screenshots, because the question is, it requires a very deep and dense knowledge. Once you are sharing the screenshots, people generally ask questions from you, and you should have a knowledge to reply. That is more important thing. Very soon we have more schools coming. So as we speak, we are having Option World, Nifty, Bank Nifty, School of Investment Banking, School of Venture Capitalist and Private Equity, School of Commodities, School of Accounting, School of Foreign Exchange, School of Treasury and Risk Management, School of Forensics. The other schools are School of Trade Finance, School of Regulatory, School of Treasury Technologies, Functional Training. We have functional trainings, forensic trainings, information technology trainings, regulatory trainings, and technological trainings. As we speak, around 200 plus trainings are listed. More trainings are coming over the period of the time. All these trainings and everything are integrated with our fixed income platform. You visit our fixed income platform and you would be able to get all trainings and all information here. Apart from that, we provided you the WhatsApp number. You just WhatsApp if you have any query, and in most of the cases we reply if you feel that the query is genuine. So the Shital Academy is a platform whose job is to provide practical and industry oriented knowledge. Of course, we link with Thomson Reuters, Bloomberg TV, and many international magazines, international books, and so on and so forth to provide you as practical training. You visit our YouTube channel. In fact, the video you just listened, you can compare this video with any other YouTube channel and rest you know. Apart from that, we just launched our TCG Video World. What is that? We have people, those who working day night in their respective jobs. Some are engineers, some are finance people and all. They don't have time to attend the regular one-to-one trainings. I agree that they need video trainings, like the content shot in the video delivered to them, and as and when they get time, they listen to it. We launched our TCG Video World, Rishi Consulting Group Video World. In this Video World, we have decided to have 100 plus topics, 5 already done as we speak. As we speak, 5 video trainings are live, pay and get. The only time need is the time to upload on Telegram groups. Every training at least 1 hour or 2 hours. It is a video training, so it is not a one-to-one training. Videos are recorded, you get the videos, recorded videos. Videos to be upload in the Telegram groups, because Telegram gives you the privilege to upload 2 GB of video. Whenever we feel that the video length is big, we request people to share their Gmail IDs. They can create their fresh Gmail ID and we upload the video in their Gmail ID. Which so that because Telegram as we speak is giving a privilege of only 10 GB, 2 GB. This TCG Video Worlds covering advanced trainings, moderate trainings, and basic trainings. So basic trainings, advanced trainings, moderate trainings. Please note my next word carefully. All basic trainings would be 2000, which means you choose any topic of basic, you get at 2000. Moderate and advanced training pricing depend upon content to content. So I repeat, TCG Video World is a platform when you have 100 plus topic, 5 already live, 2 hours video training. It's a video training to be uploaded in the Telegram group. If we need more space, we request for Gmail ID. Advanced trainings, moderate trainings, and basic trainings. Please do remember this. And this is live. This platform is well integrated with our fixed income platform, www.fixedincome.global. So this is well integrated with our fixed income platform. This is a glimpse of our hedge fund desk. Like I made myself very clear upfrontly that no third party in the whole world can enter in this platform, which means that we do not trade somebody's money. We only trade our own money. So no third party can enter in our platform. This is only for ours. But this platform covers equity desk. This platform covers scalping group. This platform covers commodities desk, comics platform, penny stock desk, silver scalping fund, which we just started, and more importantly the Asian desk where we're covering Singapore and all, and the digital gold. More product we would be launching in this hedge fund, but I will again repeat, no third party except Treasury Consulting can enter in this fund. This is not for outsiders. This is our prop hedge fund, which is completely designed for the organization, by the organization. No third party is allowed. And we are very limited companies in the world, those who are running the profitable hedge fund. Our income and everything is really good, but we do not trade somebody's money. These are our credentials. You know my handheld number 9899242978. These are our WhatsApp numbers, our platform www.fixedincome.global, email ID rahul.magan@treasuryconsulting.in or info@treasuryconsulting.in. I assure you, probably in another 1 year of time, we would have more than 100 plus different platforms across the globe. Company would continue to be cash rich. We never allow any venture capitalist to enter in our company because we know the side effects of that, and we continue to add lots of products and services. In case you wish to have any information, these are all the credentials. Thank you guys and have a great time ahead.